Hello and welcome to Looking at the Markets with David Modell. I wanted to talk about the shapes that Bollinger Bands are making. All right, because oftentimes people will talk about where the candle is, like the candle might break below the lower Bollinger Band, or the candle might break above the upper Bollinger Band. Okay, and that's worth looking at for sure. But people don't always talk about the actual shapes that the lines are making. All right, so I found this chart on a financial forum, like a discussion board. So I will put a link in the description below this video if you want to click on that, just to find out where I got this chart from, because I want to give credit to where I found it from. All right, so I did not create this chart here. And also, please be aware that these patterns do not always work. They are not perfect. They are not guaranteed to work at all. All right, so make sure you do your own due diligence and be careful out there. Okay, so the idea here is that really the only two interesting ones are the top two, number 1 and number 2 here. So supposedly, no guarantees, but supposedly, when you have the Bollinger Bands going sideways, like horizontal, okay, and then the upper Bollinger Band curls upwards and the lower Bollinger Band curls downwards, all right, kind of like a Bollinger Band squeeze and then a widening or expansion, right? When that happens, supposedly, if the candle breaks below the lower Bollinger Band, then that is supposed to be extremely bearish. Okay, now on the other hand, if you have the two lines going sideways or horizontal, and then the upper band goes up and then the lower band goes down, if the candle breaks above the upper band, that is supposed to be extremely bullish. Okay, and I'll show an example of what that looks like here. This is JP Morgan stock daily candlestick chart from tradingview.com, and here we have the candles within the bands, and you notice that they're going sideways or horizontally. And then look at the upper Bollinger Band. It goes from horizontal to curling upwards, and then the lower band goes from horizontal to curling downwards at the same time. Okay, so that is similar to this pattern. Okay, number 2 here, because you also have a break above at around the same time that the shape is happening in the lines in the bands. All right. And there it is, and that could be a signal, and notice that the stock went upward, went up quite a bit after that. Again, this does not always work perfectly like this, all right, so no guarantees here. All right, and the idea is that if it had broken down below around here, then it might have kept going downwards, all right? That might have been extremely bearish, all right? So I want you to perhaps get in the habit, if you're a Bollinger Bands trader, to start looking at the shapes of the lines. Now you have these 6 other ones here, number 3, 4, 5, 6, 7, and 8. But these, to me, would be less interesting, but I'll let you look at it right now if you want to. So supposedly, according to this chart, if the Bollinger Bands are just going sideways or horizontal, then if there's a break below the lower band, that's only slightly bearish. And if there's a break above the upper band, that's only slightly bullish. And so what do you do with that information? I don't know. It doesn't sound really very tradable to me. What about if the bands are going sideways or horizontal and then they curl inwards towards each other? Upper band goes down, lower band starts to curl up. Well, again, not a super powerful signal. According to this chart, slightly bearish if it breaks below the lower band, slightly bullish if it breaks above the upper band. And then you've got these two down here where you have one of the bands just going sideways horizontally and the other one breaking, well, in number 7, you have the upper band going sideways and then the lower band breaking downwards. And then with number 8, you have the lower band going sideways and the upper band breaking or curling upwards. Okay, and then number 7, you have a break down with the candle. Then number 8, you have a break out with the candle, break up. But again, only slightly bearish here and then slightly bullish here. So maybe not so interesting as a trader. You can certainly try any of these though. Just be very careful. I recommend if you're going to try it with demo or virtual trading. Don't use real capital. Make sure that it works before you actually attempt anything in real life, okay? So I'm kind of looking at these two shapes. Actually, they're the same shape, aren't they, with the lines, all right? But then these two patterns, a break down and a break above, could be, as in like with JP Morgan stock here, could be pretty interesting. You might want to consider using this with other indicators maybe, and just use your own judgment before you trade anything. All right, so I hope this was helpful to you. And if you'd like more help with trading or investing, I do offer coaching. You can email me for the coaching at davidmodell@gmail.com. And I'm going to keep on looking for interesting things in the markets that might work for you. Thank you so much for watching and listening. I will talk to you again soon.